if you are here to hear a webinar about the future of reporting Scope 3 emissions, the path to 100% primary data, you are in the right place. My name's Liston Witherell. I'm VP of Business Development at Vitalmetrics, and this webinar is brought to you by both Vitalmetrics and Apex companies, and I'll get to an introduction about both companies shortly. So first, here's what we're going to cover. We have a few objectives for this webinar, and it will be divided into different sections based on our presenters today. So first, Dr. Kendra Garner is going to talk about the current data challenges with Scope 3 emissions reporting. Then we'll hand it off to Dr. Sangwon Su to talk about the path to 100% primary data and the role of high quality secondary data as a catalyst for achieving 100% primary data. And then we're going to go to Trevor Donahue, who is a reviewer and verifier of GHG data. And he's going to talk about how data quality affects GHG verification when he's working with clients and verifying. Quick note, the chat is disabled. If you have questions, go ahead and put them in the Q&A box. We took some questions ahead of this meeting today, and so we have a few queued up already. But if you have questions throughout, you can put them in the Q&A box, and if we can't get to them today, we will give you a response later. All right, so with that, when everybody registered, we asked you two questions. One was to describe your role, and two, what is your #1 Scope 3 reporting challenge? And so this is who's here today. 44% of registrants are consultants. Another 28% are sustainability managers, 5% executives, and another quarter or thereabouts fall into the other category. Now, in terms of #1 Scope 3 reporting challenge, we rolled it up into meta high-level categories. 58% of you said data is your #1 challenge. So overwhelmingly, data, #1 challenge. More than half of registrants said their challenges reside in data. About a fifth say methodology is their biggest issue, and about 10% say suppliers are their biggest issue in Scope 3 reporting. When we break it down further, we can see data collection, data quality, and data availability really are the drivers of that major data category. And then in terms of methodology, just general methodological questions, emissions factors, which ones to use, specific categories, and calculations are all issues for people who are having methodological challenges. And then for suppliers, supplier engagement and how to prioritize those suppliers that they need to engage first. So that's kind of an overview of what we collected. As we break it down further, as any self-respecting data nerd would, we looked at sustainability managers, consultants, and executives based on role, how people responded. And actually, sustainability managers and consultants, the two biggest categories, line up pretty much almost exactly. So data collection, data quality, data availability, really drivers for their issues, and then methodology coming in there also. So we do have a quick question for you now. Where is your Scope 3 data coming from? I'm going to launch a poll right now. You should see it on your screen. Just take 10, 15 seconds and choose all that apply. All right. So we can see things coming in here. All right. So most people are using data from suppliers. About 40% are using government databases. Answers are still rolling in here. 72% participation. Can we get to 80%? All right, so it looks like we're evening out here. So about 2/3 of you are engaging with suppliers. 40% are using government databases. About 1/3 are using a carbon accounting platform that has data in it. 42% using purchase data and 28% other. If you are using other, we really want to know what that's all about, but we'll save that for another day. So thank you for your quick responses here. Sample size here is 146 participants. So pretty good data for us and for you. So I'm going to go ahead and end that, and let's move on to our program today. Here, I'm going to share these results so you can see them on your screen. All right. And I'd like to introduce our panelists. So today you'll be hearing from Dr. Kendra Garner, Dr. Sang-Won Soo, and Trevor Donahue. I'll introduce them each separately. Dr. Kendra Garner is the senior sustainability manager at Electronic Arts, a major video game company. She has a Master of Environmental Science and a PhD in Environmental Science from UC Santa Barbara. She's the former sustainability manager at Disney, and she's currently senior sustainability manager at EA, and you'll be hearing from her first. Then you'll hear from Dr. Sang-Won Soo, who's a PhD industrial ecologist, professor at the Bren School of Environmental Science at Santa Barbara. He developed the CETA database, which we'll be referencing a couple times throughout the presentation, just by way of giving examples of secondary data and Scope 3 emissions factors available. He's a member of WRI WBCSD working group on GHG protocol, coordinating lead author on the IPCC climate change reports, and he's the president and chief scientist here at Vital Metrics. And then your third speaker is Trevor Donahue, who has 30 years of consulting experience. He co-founded the ESG assurance practice at BVNA, which was acquired by Apex. He's a program manager, and his team has national presence. They're a CDP accredited solutions provider and a licensed assurance provider, and he has multiple accreditations. As I said, the companies that have brought you this today, Vital Metrics develops and licenses a database of spend-based emissions factors called CETA Global that helps consultants, product managers, and in-house sustainability teams fill in the gaps for their Scope 3 emissions inventories. It does have global reach, 148 countries, 400 industry categories, and about 60,000 emission factor data points. Apex offers GHG verification and assurance for the EPA mandatory reporting rule, as well as voluntary programs including Dow Jones Sustainability Index and Global Reporting Initiative. They have verified GHG emissions for 100 plus CDP reporters. And with that, let's turn to our program now, and I will turn it over to Kendra Garner to talk about the challenges with current data quality and availability.
Good morning and good afternoon, everyone, depending on where you're at. Can we get the next slide? Okay, so I'm just going to dive right in. There's a business adage out there that you can't manage what you don't measure. And I wouldn't necessarily say this is true, but in a world where we have to be able to show progress on sustainability, which stakeholders, investors, and increasingly the government are demanding, we do have to be able to measure it, and we have to be able to measure it relatively accurately. When I first started working on Scope 3 emissions, a rough estimate was fine because it was more about order of magnitude, directionality, and identifying hotspots, all of which was really for internal purposes. But with increasing disclosure and audit requirements, like those recently proposed by the SEC, and ESG increasingly contributing to corporate value, rigor in measuring emissions is changing. And I would say we have a pretty long way to go before Scope 3 emissions inventories are there. Plus, if I have to worry about how much it's going to cost to get a company to net zero, I'd rather be pretty accurate. Next slide, please. So EEIO emissions are comparatively relatively easy to try to calculate compared to gathering primary emissions data from suppliers. While there are certainly limitations and a lot of uncertainty, it's far less resource intensive and pretty easy to get a hold of, at least at an individual company level. A lot of that data, though, that we use, particularly for PG&S, is manually created. And training on how to use systems inside of a company is often pretty insufficient. We give people too many choices when it comes to reporting on spend, which tends to result in bad choices and mistakes. At best, you're talking about pretty vague field descriptions. At worst, you're talking about completely wrong data. So if we know that we're starting with low quality data, no matter how good your emissions factors might be, and keep in mind that those are all still models, even if we're talking about regional emissions factors or proxy product level emissions factors, we're kind of in a situation of garbage in, garbage out. If you talk to any procurement or sourcing expert, they will tell you point blank not to trust the descriptor categories in a spend system. And this is what we fundamentally rely on with EEIO. Whether you're talking about a single taxi ride that cost thousands of dollars or millions spent on butterfly equipment, spend often gets assigned to the wrong category, which makes it all but impossible for us to assign the right industry or emissions factor. So you're already generalizing before you even get to calculating your emissions. There are times where you can use the vendor name to correct these assignments, but vendor names are also littered with typos, name variations, subsidiary relationships, and corporate name changes that can make it really hard to track or even aggregate. Depending on the size of your company, the size of data likely requires automation to even begin to handle the amount of data that you're trying to use to calculate EEIO emissions. It takes an enormous amount of cleaning up, even if you can automate it, to answer a question as simple as who are our top emitting suppliers and how many do we need to get to 80%. This sounds simple. But because of how data and systems tend to be set up at a company, it's not. And I know most of you on this call probably already know that. Another challenge is that there's often not just one system when it comes to Scope 3, particularly as you move past categories such as PG&S and capital spend. You'll often run into multiple systems, multiple data owners, and data structures. When you add in M&A, you run into even more consistency issues as various systems handle data in different ways and they may not mesh well together. So resolving these can be quite a challenge before you even get to applying emissions factors. Once you have spend data, there's still so many assumptions that go into getting to a Scope 3 emissions estimate for any of the 15 categories. I'm pretty sure if you gave Sangwon and myself the same data set, even if we're following the GHG protocol methodologies, we'd likely end up with different estimates of emissions depending on which assumptions, choices, emissions factors we use. I hope we'd be within about 20%, but depending on how many gaps were present in the original data set and how we chose to fill those gaps, because guidance on that is often limited, the difference could be more substantial. And when we get to a world where we have to disclose our emissions, we want to make sure we're being more consistent there. We can't all be doing kind of whatever we want. It's also much easier to track our assumptions and fill data gaps consistently when we're doing everything in-house. But if we're working with external partners, if we're working with suppliers, we may run into issues of black box models or potentially proprietary data with limited visibility into how choices were made, where data came from, and what the uncertainty is, which does not set us up to have auditable Scope 3 emissions. Next slide, please. So when we start to try to replace EEIO with actual supplier data, the challenges just escalate. You're probably talking about a few thousand suppliers potentially at a big company. And even if you're prioritizing the top 60 or 80%, it's probably still a few hundred. So consistency is front and center. Otherwise, you run the risk of reducing the resolution and accuracy of your emissions estimate instead of improving it. And I guarantee that suppliers are all using different systems, software, tools, and even with growing integrations and APIs, they don't often play well together, which adds a lot of challenge to integrating primary data from suppliers. Primary data can also be quite challenging if your suppliers are calculating emissions using different assumptions and methodologies. Depending on the industry that you're in, guidance may be very specific, or it may kind of be the Wild West. I'll take cloud computing emissions as an example, not to call anyone out, but the way that emissions calculations are being done, it's all a bit different. They're cutting scope boundaries differently. So if I'm working with multiple cloud partners, how do I vet what I'm being given? How do I ensure that what I'm getting is consistent across the board? Do I need to normalize? How do I ensure that that data is auditable if I don't have full transparency from my suppliers? Not only that, but when it comes to making business decisions on who to partner with to improve sustainability, to reduce our environmental impact, how do we consistently compare across suppliers from a scoring perspective if the emissions information that they're providing us isn't consistently calculated? Some of this will eventually come down to industry-wide standardized metrics and methodological guidance, but we're not there yet. That takes time, and it's going to be kind of industry by industry. But in the meantime, what's the solution? There's also the challenge of where emissions occur versus which supplier you have a relationship with. Apparel is a great example of this. Your vendor might be the cut and sew facility, but the emissions are happening at your tier 2, tier 3, or further suppliers, and you don't have a relationship with those suppliers. Your supplier has the relationship, and they may not be contractually obligated to tell you who those suppliers are or get their data and share it with you. That doesn't scale, and that doesn't even begin to touch on the real-time issue of how do we get data in a reasonable time frame to include it in our annual inventories. A last note on supplier engagement challenges is around communication and education. It's time, labor, and resource intensive, and oftentimes automated communications don't get suppliers to engage, and training at this stage at least tends to be on a one-on-one basis, which doesn't scale to thousands of vendors. Next slide, please. So the ideal future state for me is one where data collection is streamlined and we're all working with the same data structure. So we've solved for consistency, be it common taxonomies for PG&S spend that allow for better automation and faster EEIO estimates, to unique vendor IDs, to clear guidance on how suppliers should collect, calculate, and provide data downstream. We also need better consistency on assumptions and methods for how to model supply chain improvements before we even get to the stage of primary data from suppliers. Better transparency is really the biggest one, though. If the SEC is going to require our carbon accounting be auditable, everything needs to be justifiable, and we need to begin to rely on primary data from partners, which really requires transparency and industry-wide consistency. I will stop there because I think I'm at my allotted time.
Thank you, Kendra. Great. So we'll move on now to Dr. Sang-Won Soo to talk about the road, or a road, to 100% primary data. Sang-Won, I'll turn it over to you once you get your video on here.
Yeah, you have to turn it on. I cannot start the video from my end. So thank you, Kendra. I think that what Kendra really highlighted was really the challenge of getting to 100% primary data from both acquiring the activity data from the companies and emissions factors. And both of them, basically the scope 3 is mostly done by the activity data times emissions factors. And definitely we have challenges from both sides. So unless we solve the problems from both sides, we will still have challenges. By the way, Kendra, in the Q&A, you will see a couple of questions to you. So it would be great if you can take a quick look at that. So next slide, please. So we'd like to use some metaphor here. So where we are at today is on the left-hand side, and you can see that this lady here is red-headed, red hair, and I wouldn't say who this is, but it looks to me like Kendra. And Kendra is at the current stage where hardly any supplier-specific data is available, and the ideal state is on the right, where 100% supplier-specific data is coming in real time. And unfortunately, in between, there is a body of water in between. Yeah, go ahead, Kate, next slide. That's the problem when we want to get straight to the 100% primary data, and it will quickly inundate your resources to get right there. The reason is the next slide. If we have, let's say, 100,000 or 10,000 suppliers per tier, and then, each row shows the number of tiers. For example, with 10,000 suppliers per tier, with tier 5, you will reach 10 to the power of 20 suppliers, and if they are not overlapping. Of course, these are more thought experiments. This is the number that we cannot really work with. The reason is that in the next slide, there are only 10 power to 86 atoms in the observable universe that the scientists think, and that is roughly 21 tier with the 10,000 supplier per tier. So because of the power law, the number of suppliers from which we need to gather data quickly increases to the level that we can not really practically collect data from. So the resources needed to collect that amount of data is simply too much. And we have been engaged in a number of supplier data collection activities in the past, and we realized that it is a very substantial challenge, and we didn't really get much data after a long time of trial. Of course, some other sectors more successful than others, but in general, it's very time-consuming and resource-intensive challenge. Next slide, please. The good news is that only a few suppliers are material to your company. So the goal here is to identify and prioritize them for primary data collection, and understanding them and prioritizing them. We believe that that's really the key, given the number of suppliers from which one needs to collect data from. The next slides. So here are the stepping stones before we can get to 100% supplier-specific data. The first one is high-quality secondary data for prioritization. So by the way, the part that I'm talking about here is more about how can we get the emission factor side aligned with overall scope 3 emissions calculation. And obviously, we'll be happy to talk about the activity data part. We have been working with many consulting companies that we work with, and we have some experience there. So we will be happy to talk about that. Probably that could be the next webinar topic. But today I'm focusing more on the emissions factor side. So we want to use the high quality secondary data for prioritization purposes, and with the priority in mind, we want to efficiently increase the primary data, starting with the major contributors. And then we want to gradually increase the overall data quality, and through third-party verifications that we will be talking about after my part. Okay, so these are the 3 stepping stones. Next slide, please. And we again want to use some metaphor here. So let's say here is a beautiful picture of Sierra. Sierra is the daughter of Liston, who is hosting today's webinar. Apparently they went to a pumpkin patch not too long ago, and you can see Sierra in the forefront and some background. You can see the beautiful picture. And let's say this is the ideal picture of your scope 3. Crisp, clear, it is very clear what you are seeing and what is important. All those things are very clearly visible. Next slide. Okay, so this is roughly, let's say, where we are, where we got some supplier data from some of those pixels, let's say, but they are not really concentrated in where the most important part of the picture is, so that overall we cannot really visualize what we are seeing, and it's just a patch of some data of which the quality is not really clear. Next slide, please. So using the high quality secondary data, suppose that we are able to at least have a blurred image, but this is a complete image. Let's say we quickly match it, high quality secondary data with spend data, and activity data is also very important. It needs to be collated and standardized. And once we have done that, let's say, we can at least see, the raw picture, low granularity picture, just like this. But what this does is basically show what is important. It really helps us to prioritize. So you can see where the Sierra is located in this picture. So let's say we want to collect our primary data, focusing on what we are seeing as the priority and major contributors. Next slide, please. Yeah, click once more. Right, as we gradually improve the portion, increase the share of the primary data for the identified hotspots or the priority suppliers, we are able to really highlight where Sierra is with the much more high granular pictures like this, so that the remainder of the picture is also important. But what really the focus here is that, well, as long as we capture the most important part of this picture, which is Sierra, we can at least see the main the purpose of the scope 3 whole picture. And then once we get there, the next slide, yes, we can gradually increase and expand the primary data portion, and we can see now, one more click. Yeah, we can also gradually see in the background, the lady who is standing in the bag is Liston's wife and Sierra's mother, who is also very important. So we can gradually expand our primary, the scope of the primary data, so that we can see some pumpkin patches and Sierra's mom and all that, so that we have a better picture overall. So we can gradually improve overall data quality this way. Next slide, please. So here is a quick case study. So this was an electronics client. We, as Liston mentioned, that we work mostly with other larger consulting companies. Occasionally, we are also engaged in retail companies, retail clients, and this is one of those examples. So this is consumer electronics industry, 1.7 billion annual revenue, and we standardized and collated the primary the activity data, and then we mapped that with our secondary data, Sierra Global, and we were able to see and list what are the major players in the overall scope 3, so at a low granular level of categories. So top 18 suppliers are likely to make up about 80% of the purchased goods and services emissions, which is the first category of the scope 3 out of the 15. And top 10 suppliers are likely to make up 65% of the emissions. And they have tens of thousands of suppliers. And out of that, very few of them really make up the majority of the scope 3 emissions. So we can focus first on that, and which is what we are currently doing. Next slide, please. And in doing so, the quality of data really matters. The reason is that it does not only give credibility in the activities that we are doing, but also it illustrates where to focus. And the bad data doesn't give us the accurate information where to focus in our effort. So more specifically, low quality data may misidentify the priorities, and that will basically ruin the rest of the effort of collecting primary data. So we may put a lot of effort in collecting primary data, and then they may not really contribute very significantly to your overall emissions or the reduction potential. Next slide, please. So what are the high quality data? So high quality data, what is I think important is that, as Kendra mentioned, almost none of the Scope 3 data sets, emissions factor data sets, are measured. So these are generally modeled data, and obviously the whole purpose of modeling is to represent the reality. So the question is whether the Scope 3 data that we are using is a good representation of reality or not. So based on that, some quality of the quality of data, some of them may represent the reality better, and some of them don't. So next slide, please. Yeah, so this is an example. Let's say these are the actual data points. So we are comparing two data points for electric power generation, which is generally better understood data, because most of the emissions for electric power generation comes from the direct emissions from electric power generation. Scope 3 portion is relatively small, and greenhouse gas emissions directly coming from power plants are one of the better understood the data sets in the greenhouse gas emissions world. But even so, you can see that database 1 and 2 has very significant difference between the two. And next. But if you look into the alternative statistics that are out there, then you can see which one may be under or overestimating between these two data sets. And this is what I was talking about in terms of the representation of reality. So the other alternative data sets, they are not really coming in the form of kilogram CO2 per dollar format, but with price data over a volume of power generation and emissions, we can basically transform them into kilogram CO2 equivalency per dollar information. And if you do that, then we can see which one is more comparable with alternative statistics. The next slide. Yeah, the same thing we have done for another data set, which is data point, which is on the cement manufacturing. And some data points are much lower than others, and some are much higher than others. And these are, some of the evidence is that you can actually triangulate them and see which one is better aligned with reality. Next slide, please. Yeah, again, so it is important to realize that data is generally, Scope 3 data is generally modeled, not measured. And that's why it is important to understand the methodological integrity and what are the underlying data sources. I think it is also important to see whether the data has been systematically updated over a long period of time. And whether the quantitative uncertainty information is also integrated with the data. And documentation and metadata is important. Also, transparency and traceability is very important. And there is no data set that is perfect, meaning that, well, always there are rooms for improvement. And when unexpected result or potentially erroneous results are identified, then it is very important for us to be able to trace back where are the sources of such errors, and what are the better source of information. So it is a constant maintenance and updating that is needed in order to really keep the quality of data intact. Next slide, please. I think that is probably the end of my side of the story, so I will bring it back to Liston.
Great, thank you, Sang-Won. I'm going to bring Trevor on now, and I'll hand it off to Trevor to talk about data verification.
Yes, once again, good morning, good afternoon to everybody, wherever you may be on the globe. Again, Trevor Downey here with Apex, and I'm going to touch on probably a lot of the same ideas as my co-panelists here, but just maybe from a slightly different perspective. Like mentioned before, to start off, I guess to talk about the importance of prioritizing high quality data. These days, I mean, as I'm sure everybody on this call is aware, there is a greater scrutiny than ever being paid to reported ESG data, and most specifically to scope 1, 2, and now 3 greenhouse gas reporting. We're seeing it from all sides. Public agencies at the federal level, we've got EPA and SEC, various states. I mean, my own state, California, AB 32, and then the latest thing coming from them is SB 260, which is going to require any large company doing business in California to report their emissions. On the private side, we have investors that are, they can put pressure with, allocation of, capital in sustainable projects, or just, wherever they want to make their investments. And then consumers are, much more apt to boycott unsustainable products now. And then even down, employees of these various companies are demanding a greater say in how companies' sustainability is managed, and so on. And then we move on to the various NGOs and media. We've seen lots and lots of accusations out there of greenwashing. So I routinely get calls and emails from members of the press and other NGOs that want to talk to me about the work I do with my clients. Because oftentimes my name is the only one that shows up, or my name shows up on the assurance statement when the company posts their greenhouse gas inventory. So yes, I routinely get calls, which I never actually respond to, but they're out there and they're looking. So from that aspect, high quality data is really important for, from the verifier standpoint, because if I'm putting my name on it, putting my Apex's name on it, that it is correct or accurate, then we really want to make sure that it is. There's also lots and lots of cases of higher profile companies being criticized for what they're reporting and how they're reporting it. One that leaps to mind, and some people may be aware of it, but without naming any names, we have a fairly large company that publicly reported their scope 3 emissions in several categories, including use of sold products. In their disclosure, they noted that they were limiting, actually in their disclosure, what they put out publicly, they noted that they were limiting their disclosure to a specific subset of products rather than all of the products in their inventory, because they simply didn't have the data to determine those emissions at this time. It was just really beyond, they're working on it. I guarantee they're working on it because we work with them, but they just didn't have the data at that time, so they excluded those particular sources. Nevertheless, they received considerable criticism from some watchdog groups and members of the media, and accusations that they were undercounting their emissions and making up their own rules as they went along. So now, in addition to the increased scrutiny on ESG and GHG reporting, we're also seeing lots of increase in pressure to have that data assured by customers, investors, as well as by suppliers or our clients that are reaching out to their suppliers and requiring their suppliers to report on CDP, and indeed have that data assured for both tier 2 and tier 3 suppliers even. And many of we're also seeing a lot of clients that are imposing or performance requirements on their suppliers, as far as in the more mature programs we're seeing. And in addition to the demands for assurance in general, we're also now starting to see demands for higher levels of assurance. As we expect with the SEC, we expect for scope 1 and 2 that they will likely require reasonable assurance, where historically for CDP some other frameworks limited has been sufficient. So it's really no longer good enough to say we didn't find any errors. Now people they're wanting to hear that, it's accurate, it's right, and you're doing it right, and it is accurate. And with scope 3 emissions, the available data and emission factors just don't support that level of assurance. Next slide, please. So the importance of high quality data for verification. I mean, primarily, obviously the obvious thing is it leads to increased accuracy. It's much better for us. I mean, if we can see high quality activity data, as opposed to just spend data that's been aggregated and collated, aggregated out of some accounting system, that's much better for us as verifiers to be able to spot trends, spot anomalies, mistakes, and so on. And at the end of the day, accuracy is really what we're looking for. I mean, historically, it has been accepted that scope 3 is just a big estimation with a lot of room for error and variability in there. On top of that, it's going to add transparency and credibility to your reported data. If it obviously the more accurate it is, and if we can stand by it, and that better credibility will also lead to an enhanced reputation, in your company name, your brand name, higher stakeholder confidence, and overall much more believability in that data that you're reporting. Okay. So, and finally, I guess we that better accuracy allows us better tracking and managing progress towards your goals. Like Kendra noted earlier, if you can't measure accurately, you can't manage it, and that is true. If you can't identify those hot spots in your supply chain, and be able to really focus on those and figure out how to manage those and reduce those, then you're going to have a hard time meeting your goals. Next slide, please. So, so finally, how do we evaluate the data quality? Again, historically with scope 3, a lot of the data we received is spend based, or it comes from vendors in one form or another, and that's all over the map. Some of I can kind of walk through some of our criteria, but for higher levels of assurance, and particularly for reasonable assurance and so forth, we always want to trace the data back to the source, all the way back to the actual activity that originally generated the emissions, whether is that fuel being combusted or electricity being consumed or whatever. And then, so we want to be able to trace that and then look at all conversions and calculations that are happening to that data on the way up to the final reported greenhouse gas number. Oftentimes we'll get a job, we'll be performing an assurance engagement where, somebody will, actually the classic example that leaps to mind is business travel. Our client will hand us a report from their business travel provider that just says, your emissions were 50,000 metric tons from air travel, but without any way to compare that. And usually that's not anything we can verify. That is because we cannot, we usually can't duplicate those calculations. And Kendra also mentioned the cloud, the cloud services providers. Very similar situation with them. I mean, for some of those, I've actually provided validation of their methodology, and they have a validation statement from me on their website that shows I've reviewed their systems and where the data is coming from, and so that hopefully that number coming from them is more believable. Others, it's a black box. So I think I'm getting really close to time here, but. So I guess, and finally, just as part of the process, as part of our overall process, we'll be looking at systems for data collection and review and collation. We also, we look at the competency of the people that are responsible for collecting that data, and we do that by conducting site visits and interviews. So that's kind of the overall process and how we evaluate data quality and what we're looking for. So, and I think that's probably about time for me.
Thanks, Trevor. All right, wonderful. So thank you to all of the panelists, and thank you for so many people, vast majority of you still being here at the end. We do have time for questions. I'm seeing some questions come into the Q&A box. You can go ahead and drop your questions there. We're definitely not going to have time to get to all of those. So if you submit them with your name, we'll make sure to follow up with someone on the panel who's best suited to respond to your question. But for now, let's go to some pre-submitted questions, and I'm going to bring all of the speakers, ask you to join via video and audio. If you can get yourself started, Sang-Won. Okay, we're all here. So first question, and maybe we just go around the panel. How will the outcome of the SEC's new rules on climate disclosures affect Scope 3 reporting in the US and abroad? And why don't we go to Kendra first for that?
Well, it's going to force us to disclose our Scope 3 emissions if the SEC rules do actually come through as they are proposed. I think there's still so much up in the air, though, about what we will have to disclose. Questions about which of the Scope 3 categories are material to a given industry is still undefined. But fundamentally, we are going to have to improve the rigor of our Scope 3 emissions and improve our reporting. This is not how it's been done up to date. Every company does it differently. And once you get into a world of SEC disclosures, you can't have every single company taking a different approach. It's a lot. It's going to cost us all money. It's going to cost us all time. We're going to have to either build out teams or hire consultants. And I think that the biggest challenge is real-time data. If we have to be disclosing on an annual basis at the end of our fiscal year, we're going to be using estimates for the final quarter until we can have a situation where our systems can handle real-time data.
With about half of people here being consultants, Kendra, I think you just put a lot of smiles on faces. Why don't we go to Sang-Won?
Yeah, I don't have much to add to what Kendra already said on this.
Trevor, would you like to add anything, or should we move on?
I don't really have much to add either, other than that it will add a lot to the verification side as well. A lot of time on our end looking at all that data.
Great. All right, let's move on to the next question then. How do we move quickest from spend-based data to real activity-based data to ensure correct impact calculations in Scope 3? And Sang-Won, maybe we start with you on this one.
Yeah, again, I would emphasize the importance of prioritization. So, you know, the priority suppliers are very limited, and you know, just focusing on those priority suppliers, engaging them in the conversation, and let them, you know, develop high quality activity-based, you know, primary data set is really the key. We are getting, you know, regular kind of distress calls from the suppliers to major corporations that already declared carbon neutrality or net zero goals in a not too long distant future. Many of them don't know what to do, and, you know, they are in some cases in panic mode. So, you know, the problem is not only their Scope 1 and 2 emissions, but also they have to acquire Scope 3 emissions from their suppliers. So the challenge really propagates throughout the supply chain, and currently it is you know, very challenging situation. But, you know, as SEC rules roll out, which is still a question mark in many, you know, to many of us. And as the Scope 1 data for virtually, you know, all the publicly traded companies are really reported in high quality, then I think that gradually the challenge will ease up, and we will be able to calculate higher quality scope 3. It will take some time, and I think that the prioritization in the meantime is probably the only way that we can really move this agenda quickly until the overall data quality landscape improves to the next level.
Kendra, Trevor, do you have anything to add?
I don't really have anything to add to that.
One thing I would mention is that there is kind of an intermediate stage between using spend-based and using activity-based, which we were looking at, which is looking more at units and proxy LCA data on a product category level basis, which can at least begin to improve your emissions estimates. But this is a lot of work, and getting a hold of product level LCA data is hard and incomplete, right? You don't have it for all of your products.
Yeah, one thing, I have a lot of calls with clients and people interested in the CETA Global data set. And so they're asking, can we continue to break it down into smaller and smaller categories? And one thing we've been talking about internally here is there seems to be this blurring of the line between corporate emissions reporting and LCA on the other hand, which is designed to be much more specific and seems like it wouldn't be able to scale to the whole corporate level emissions. But I think everybody's trying to figure out how far can they move in one direction or the other without killing themselves or going way out of budget or scope. Okay, great. So let's move on to the next question here. Should investors expect reported scope 3 emissions to be highly accurate? I think I know what the panelists are going to say, but go ahead, Kendra.
No. Today, we're relying on models. Models are inaccurate. The reality with investors and corporations is that they don't want to hear about uncertainty, but fundamentally there is uncertainty in every stage of scope 3 emissions estimates. I think that we're on a journey to getting towards more accurate emissions, but we've got a ways to go, and some industries are further ahead than others.
I agree with Kendra. There is a huge enthusiasm in the market that we want to really have a perfect scope 3, but the reality falls way behind. And I think, unfortunately, the majority of the companies that are out there is closer to the left-hand side of the picture that I shown to you, rather than the right-hand side of the picture at the moment. So it will definitely take some time for the overall scope 3 quality reporting the quality of the reporting improves. And when we think about the kind of chaos that the market had when the first the nutrition fact was introduced, for example, we are at that stage, I think. So there are a lot of confusion and uncertainties in the way how those numbers are reported, but over time definitely it will clear up, and now we are at the beginning stage of that journey.
Yeah, I would completely agree with all of that was said, and just historically I think scope 3 has just been more about understanding your farther reaching impact rather than trying to quantitatively measure. It's just more gaining that understanding that once you move something out of your scope 1 or scope 2, that there's still an impact happening out there. But now the demand is for more accuracy. So we definitely have a way to go to get there.
So let's go to some audience questions now, since we have time. Trevor, Ashley has a question for you. Scope 3 inventory seemed difficult to verify. What would you recommend for companies preparing for verification?
I would say get as much as granular as possible on your data. I mean, that's just that question is wide open for because every category is different. For, I said, for business travel is, I said, threw that example out earlier. I always tell tell my clients that they should be calculating it themselves and not to rely on their, not to rely on the numbers provided by their travel provider. I want to be able to see the calculations. I need to be able to see the source from the mileage, the travel data from their travel provider. Purchase goods and services and capital assets or capital goods are both, those are largely spend-based and subject to the limitations that were discussed earlier, that Kendra talked about, with the problem with using spend-based data and pulling that out of accounting systems. And I don't know what the solution is to there right now. But I guess the best thing I can say is be very clear on your calculations, on what the source of your data is, and have supporting documentation for it to the extent possible. I mean, I realize that a lot of scope 3 is made up on assumptions, but on assumptions and estimations, but you should also be able to justify those to me when you present them.
All right, let's move on to another question. Thank you, Trevor. We have a question from Isabel, and Isabel would like to know, what boundary do you recommend in the data request from suppliers? For example, do we only include upstream scope 3 emissions from suppliers to avoid double counting downstream categories?
Okay, so if I understand it correctly, so when suppliers send the data to the client, they may just jumble together upstream scope 3 also with and downstream scope 3, and shouldn't we distinguish them? Yes, I think so. So when we look at scope 3, there are 15 different categories, and the most kind of the dominant category in terms of the overall contribution is the first categories, which is purchased goods and services, and to a certain extent capital goods, which is the second category, also dominate depending on the sector. And that is qualitatively very different emissions as compared to, for example, processing of the sold goods or the use of sold product, which are other categories down the road in the list of the 15 different categories. It is very important to distinguish those upstream categories from downstream categories. Another very important thing that I didn't mention was that there were a lot of questions about life cycle assessment in the Q&A. I couldn't really answer all of them, but absolutely right that if we are to find granular primary data from the suppliers, essentially we are looking at the product account. So that's where the product account and organization account mesh together. So if I take a step back and explain what I'm talking about, is that all the SEC requirements and the greenhouse gas reporting standards that we are talking about are held at the corporate level, organizational level. That is organizational accounts. That is what companies are primarily concerned about in terms of external reporting and investor relationship and ESG reporting, etc. But in order for them to be able to come up with accurate primary data for scope 3, it needs to be based on the goods and services that they purchase. And goods and services that they purchase and the greenhouse gas emissions associated with those goods and services do not come directly from the corporate account of their suppliers. The corporate accounts of their suppliers will be overall corporate-wide greenhouse gas emissions in scope 1, 2, 3, and the particular emissions attached to the product or service that you are acquiring from the supplier may be very different from the average emissions per dollar of revenue, for example, of that supplier. So how can we resolve that? That is basically where the product account, such as life cycle assessment, will come into play. There is a bit of caveat though here, because greenhouse gas accounting and life cycle assessment, they are developed in a different fashion. So there are small differences here and there And depending on the data set and the sector that we are looking into, those differences may actually play quite a bit of role in making a difference in the overall results. So we want to make sure that the data that we are using from life cycle assessment is consistent with the purpose that we have here. So this is quite a long answer to Isabella, your short question. I do see some of your questions in the Q&A, and we'll be happy to have a separate meeting with you if you like to go over those questions.
All right, wonderful. Thank you, Seung-Hwan. I think that's probably a good place to leave it. We're at time. Thank you to all the attendees here. We'd love it if you gave us some feedback. We're going to send you a link to a survey to tell us what you thought about what you saw today. And we'll also be sending you a link to the recording of this webinar. So thank you to all of our panelists, and thank you to our attendees. And I hope you all have a wonderful day.